Supply chain volatility, what now? Supply chain volatility has become a significant disruptive issue since the pandemic. Not only are supply chains increasingly at risk due to geopolitical tensions, and I think we are all aware of what is going on in Eastern Europe, but also in Asia, that they are being targeted by a range of threat actors, often in high-risk locations. As supply chains become increasingly integrated with the digital sphere as well, they're at greater risk of cyber attacks, either geopolitically motivated or motivated by criminal or rogue elements. And leading organizations therefore have to reevaluate their supply chain security, both physical and electronic and virtual. So the question that this panel is going to be looking at today broadly is, what can risk professionals do to build greater supply chain resiliency for their organization? And we are extremely fortunate, therefore, to have three of our distinguished members and partners with us on this panel. First, Greg Anderson, who is a partner at Herbert Smith Freehills, a very good partner of ours. Richard James, head of risk and insurance at Nuclear Transport Solutions. And finally, Adriano Lanzolotto, Vice President, Client Learning and Development at our good full partner, FM Global. Gentlemen, thank you all very much for joining us today. So I think we're going to break this panel down into sort of three pillars. The first is recent threats to supply chain, then what are some of the challenges to modern supply chain risk management, and finally questions about risk transfer. So thinking about some of the disruption that you see in supply chain risk management today, I think, Richard, we'll go to you first as the risk manager on the panel to give us maybe some practical commentary of what you are seeing as an organization disrupting your supply chain.
Okay, so just a little introduction to the company. Nuclear Transport Solutions, we have ships to transport nuclear materials around the world on behalf of the UK, and also we have trains that transport materials around the UK and also do a lot of non-nuclear work as well. So supply chain risk is our number one risk at this moment in time. It's a considerable amount of attention both in the boardroom and also with the exec team. And to put it simply, really, in practical terms, we are having difficulty in the supply chain at the moment, both in terms of availability, timeliness, but also the obvious impact, cost, inflation. Some of our biggest supplies from a transport business is fuel, it's electricity, it's locomotives, it is parts for those materials. And the cost is quite significant increase, as we've all experienced in our personal and work lives around fuel. Not only is the impact on the economy, but also socially as well, with the growing importance of ethics and compliance and ensuring that the supply chain is really truly ethical in its practice. So for us, this is a real life situation, and it's key going forward.
Absolutely. So we see a lot of economic, social disruption, as you've said, Richard. What else do we see in terms of supply chain disruption? Adriano, in a company like FM Global, you know, you're leaders in physical property risks, tangible property. Can you tell us anything about what we are seeing in supply chain disruption from a climate perspective, perhaps?
Yeah, good point. I think I can frame this within the lens of ESG, if you like.
Absolutely.
It's absolutely a word that we're encountering a lot. My personal experience with ESG, and I'm not an expert on ESG by any means, is a couple of clients a few months ago asked us to help them with the reporting of the impact of climate change on their business. They said, you know, as an insurer, as a property insurer, you have a lot of data. How can we use that data to help us with the financial reporting? So we started a process, and we came up with a suite of products, including, you know, a climate risk report and a reporting aid to be able to help them. But the question is interesting, and I'll focus on the E aspects, because environment for me means natural disasters. It means the impact that natural disasters have on the organizations, but also the impact that our clients' organizations have on the climate. Risk managers and ESG directors tend to speak about mitigation and adaptation. And there could be a confusion there, because for ESG experts, mitigation is mitigation of climate change. So decarbonization, for example. The installation of a solar panel on a roof is mitigation for them. While adaptation is how companies can adapt to a growing threat. For example, the installation of a flood barrier around the plant could be an adaptation. For risk managers, the other way around. Mitigation is a risk mitigation, so a flood barrier. And adaptation is how the company changes in the face of climate change. For example, introducing new risks, such as a PV panel on a roof. The whole point that I'm trying to make is that sustainability managers, ESG directors, and risk managers need to really talk more, because there are things that can be prevented, there are things that can be fixed just by collaborating. And an example of that is the vast amount of projects that we've seen in terms of installing renewable energy, energy storage systems, green roofs, wooden construction, to be part of a transformation to a greener economy. But all those things introduce risks, and that's where the risk manager needs to be aware of those things.
Yeah. In terms of an absolute risk environment, I mean, I think we all know the answer, but just to make sure we all agree, is FM seeing more physical climate risk as the cause of supply chain interruption? So say, for example, this last summer when we had heat wave and so on across Europe.
Everybody knows that these things are growing in frequency and magnitude. The standard hurricanes, flooding, but also secondary perils. Hail, freeze, Texas, for example.
Talked about a lot less frequently in the UK, but yes.
And wildfires. These are, we call, in the insurance world, we call it secondary perils, because they're like it used to be a second tier of perils in terms of total loss to insurers. Predominantly, we see flood and wind being the drivers of primary perils. But these things may change, because they're all aggregate events.
Yes.
So if you think about, wildfire in Australia and California, we are studying that, and even Europe is not free from those kind of risks.
Yes, and of course this summer when we had such a heat wave in the UK and there was wildfire in parts of the country, I remember, in Canada and North America this is very familiar, but I remember a lot of people being quite surprised that this was now a cause of interruptions. I don't know, Richard, if that impacted any of your...
Less so at the moment. It hasn't affected us yet, but I think that could be one for the future.
Yeah, drier summers, more tinder like wood around. While we're on the topic of ESG, and I think obviously as Adriano says, the E tends to get most of the emphasis there. I'm reminded of a conversation we were having the other day, Greg, when you were speaking about some of the social implications in ESG that can be as much a threat to supply chain as environmental concerns, particularly things like transparency in supply chains of working practices, etc.
Yeah, I think that's right, and climate, environmental issues obviously get a lot of focus, and understandably, but the S&G in ESG is also a critical issue in the supply chain. Businesses, particularly big businesses, of course, are very visible publicly now, and aspects of your supply chain will also be visible in the way that you represent yourself publicly. A good example of that is modern slavery. Because we have the Modern Slavery Act, there are now obligations under that act on big corporates to issue human trafficking statements on an annual basis. That legislation is now getting stronger teeth. Initially, it was thought to be more aspirational rather than having the teeth behind it, but what one is going to see are requirements for transparency in your supply chain, but actually checking that your supply chain does what it says it will do. So if, for example, you're going out to the market and in a disclosure statement, You are representing how transparent your supply chain is, what role it has or doesn't have in relation to modern slavery. Have you actually put someone on the ground to go and check that? If you've got let's say, a supplier in a different jurisdiction, whether it's Asia or South America or wherever it might be, do you know in fact it's complying with that legislation? Because you could get yourself into difficulties both under the Modern Slavery Act, but also in relation to D&O type issues, if you're representing things publicly in relation to your supply chain and those social and governance type factors. One can see liability risk flowing from that, both in terms of class actions or, depending on the nature of your business, regulatory investigations as well. Many businesses, I've got to say, and we speak to them about ESG all the time, are still at the beginning of that learning curve, and it's understandable. It's a huge area, and it's from a supply chain perspective, it's clearly something that as time goes on, boards and those involved in risk community are going to have to be very careful to get to grips with, and not overly focus on the environmental and climate side of things, to the extent that that prevents focus on S&G issues as well.
Yeah, absolutely. That just reminds me that, Richard, a moment ago you spoke of something about the question of ethics in supply chains, and I presume that this was very much what you were thinking about, such as where do you source things from, and you know, and how you make purchasing decisions. And so the S is as important as the E. Yeah, absolutely. Greg, we've looked at political and economic disruption. We've looked at the E and the S of ESG. I think the other big elephant in the room, obviously, is cyber risk. And I know this is something you've done quite a bit on. I mean, what is the potential around, what is the threat from cyber to supply chain?
Well, it can cause issues in a number of different ways. The obvious one is that if you're interacting with your suppliers, there'll be some level of IT connectivity, which provides an opportunity for malicious actors, whether that be software code getting into your system via weak points in the supply chain. I've seen that in cases, or malicious actors doing effectively the same thing and getting into your systems via that route. So if you're not locked down on the security aspects, your contacts with your supply chain can provide a route in to affect your business. You may have threat actors who impersonate your suppliers via phishing, fake president frauds, that kind of thing. And again, that's a big issue for businesses internationally now. And the third, and perhaps the obvious one, is that any number of cyber issues could affect your suppliers directly, which then knocks them out, whether it be a ransomware or attack or whatever it might be. And if your business is over-reliant on that supplier and then you can't service your own customers as a result of that supply not being available, of course that's going to cause business interruption loss. It may imperil your business depending upon how reliant on that supplier you might be. Perhaps the best example would be an IT outsourced service provider in that context. If that, businesses are doing it all of the time and have been for a good few years now. It offers all sorts of advantages in terms of flexibilities and economies of scale, but the technology is changing so quickly. And if it goes wrong, and again, I've done cases where it's gone wrong, it can cause very significant issues for businesses. And the regulators as well are focusing on operational resilience in that context. If you're a regulated business, the FCA is going to be looking at that. Can you recover if one of your suppliers goes down, and that affects your business as well? And then hostile nation state concerns exist in the supply chain from a cyber perspective as well. Huawei have been in the press a lot. Obviously in recent times, but we've been involved with clients where the government are actually putting their own people into businesses to look at those kinds of aspects of the supply chain to make sure that there's not nation state type exposure for those businesses as a result of cyber risk, and it doesn't matter whether it's immediate or a little bit further down. So it's a bit of a minefield, and for me the joining up point is that it's no good having your tech people being all over your IT security if the risk people don't fully appreciate where that risk sits in the supply chain and how it can come into the business if the two parties aren't speaking to each other.
Yeah. Just to echo that, I think you've got to work together collectively as suppliers and you as a business to address this. I think you're right there. And a practical example of that is that in the nuclear industry, with security being so high and so important to us, we have developed capability around cyber. Much so than some of our suppliers. So what we've been, an example of help suppliers we've done is with the support of our key supplier, we've actually done some testing on their systems to see whether if we could get into the supplier's capability. Quite brave by the supplier, but it was actually working together because we did it, and it was amazing what we could find and do. So, and it was that sharing that finding, sharing that learning with them, so that they can then address cyber going forward. So
you've jumped ahead into challenges in supply chain risk management and good risk management and cooperative behavior. So a number of big threats: environmental, cyber, political. And I don't have a Slido, but I'd just like to do a quick show of hands. I mean, when those of you in the audience think about supply chain, who is most concerned with environmental issues, climate or physical climate-related issues? Right, who is more concerned with cyber? And finally, who is more concerned with political or economic disruption? It's a close-run thing between cyber and politics. Environment is clearly bringing up the rear, but perhaps it is the bigger issue in the longer term.
It's interesting that nobody is concerned about natural hazard. I may go home.
Alex,
fertile ground for you to talk to members. Yes.
I think it's different time zones. So, for example,
how do you mean?
So for example, at the moment, economy is our main concern.
Yes.
And that's because look at our supply chain. It's like 40%. A large number of our suppliers have really poor financial ratings. So at the moment, it's can we buy that material? Future, next year or the following year, I think it will be actually the wider disruption. But at this present moment in time is can that survive it? Can that supply chain survive a recession?
Yeah.
Or will they go into liquidation?
I suppose
So
that's
it's different levels of.
Different from a supply chain aspect, because often your supply chain, what with the advent of just in time and the necessity to keep business operations running, you must be concerned with the here and now by its very nature than something that may be in 3 or 4 or 5 years' time. Adriana?
Actually, I would be interested in Richard's view on the physical risk deriving from cyber, because as property insurer, we are worried about the consequential physical risk.
Yes.
People think about, okay, I don't have a turbine, so nobody can go in and make it explode. But things like temperature control in a building, remotely controlled, the Internet of Things allows a lot of exposure to create physical damage, because once you eliminate the heating of a building, then there is freeze outside, you have pipe breaks and all that. So, I don't know if my distinguished, like you call them, colleagues have an experience. And because I think between the IT and OT environments, we have an IT that is probably well controlled, with a good ownership, with the standards, with probably modern, with patches, and an operational environment that is probably a legacy environment with passwords shared maybe on a post-it and put on a control
Sure, we've
room.
never done anything like that.
I've seen it, but it's the middle point when there is communication between these two environments. There could be a vulnerability there.
Does anybody want to offer a view on that?
Well,
Sorry, no, it's okay.
I was going to say, first of all, it's a really, really important point. And one of the things I've been saying for years, and to the risk management community, when you have any kind of a cyber incident and physical damage resulting from cyber is a real risk, particularly in certain industries that are most likely to be targeted, not least by, say, nation-state attacks. And when you look at what the fallout might be, just going back to the beginning and the kind of cyber exposure that businesses have in the supply chain, that flows through in all sorts of ways to all sorts of different risks, of which physical damage is one of them. And very often businesses look at it, I think, perhaps a little bit too narrowly and say, okay, well, that's a cyber insurance risk, I've got a cyber insurance policy, and aren't thinking about their property damage BI coverage and what coverage exists there, or their D&O policy or their PI policy, et cetera, even public liability in some cases. So you do need a holistic viewpoint on how your supply chain can generate cyber risk, can generate insurable risk, and then how to transfer that.
Absolutely. All right, well, as time is pressing on, I think let's move on into the challenges in supply chain risk management. So, Richard, I think this is really, again, a question for you as our risk manager on the panel, but adapting to recent supply chain problems and the question of practicing good risk management. You and I were speaking about this the other day. We often speak about supply chain risk management as if it is one tangible area that has an owner and sits within someone's hands in the organization. But I think you convinced me that this is actually a real challenge, you know? Who is responsible for the supply chain? Where does it sit? And how do you encourage the organization to have a proper structure around managing it?
Yeah, okay. So a couple of things. So in terms of role responsibility, our commercial director has as executive lead on supply chain management. However, to truly understand the risk and truly manage that risk, have to take a collaborative approach. I can see it across my business now that in the areas of engineering there's asset-related risk to the supply chain. In HR, there's people-related supply chain risk. It's cross-cutting the business. So the way that I'm going to approach it in my business and going forward is more of a collaborative view, whereby as a forum, as a collaborative group, look at the supply chain risk together in partnership, because I think the days of supply chain procurement, you take a lead on supply chain risk, I think those are gone now. I think you have to address this collectively as a business.
Yeah, absolutely. And one of the problems there that we often talk about is also outside your organization is the difficulty in understanding even where your supply chain runs to, you know, which tier of supplier are you dealing with, how far does it go? I mean, is this something that every organization or your organization has difficulty doing in mapping the sort of tiers of the supply chain?
It does. It gets very complex or complicated, as we spoke earlier.
Yes.
It's. I mean, the obvious thing is the initial supply chain, but you've got to build that relationship with that initial supply chain to then begin to go further down the chain.
Yeah.
So I think that's work in progress, I would say.
Yeah. And the importance, Greg, as you mentioned before, of performing due diligence on those suppliers. I mean, you gave the very good example of the legal reputational liability implications of having a supply chain that runs, say, into a country with human rights abuses. You know, my favorite one is, well, the example I like to use is that as a clothing retailer, if you have a supply chain that runs to Uzbekistan or cotton is being picked by child labor, but it may be 3 or 4 layers down in your supply chain. How do you perform that due diligence? What is best practice in that way?
Well, I think the starting point is, as we've already heard, to make sure you're doing something about it and doing so in a collaborative way. And what we sometimes see and hear from clients is that despite best practice being collaboration, in fact, not a lot of that necessarily goes on in the business. That's where you get the DD risks, because DD risk isn't being approached in the right way. I mean, one would be looking at operational protections. Is it built into crisis response planning for your business? Are you looking at ensuring that you have alternative suppliers that can stand in place of that primary supplier, and what might that look like down the contractual chain for you? You'll have contractual risks in terms of the quality of the contract that you've got with that client, and not least in the cybersphere, there are increasing requirements around what those supplier contracts ought to say in order to protect the business, in order to require suppliers to work with you. And then when you take the step down again, you're looking at the insurance protection really as a mitigation of last resort. And that's the way it ought to be viewed in the business. But you need to get those primary steps right first, the primary mitigations as I see it. And where it can go wrong is if, for example, you have let's say a contract with an IT outsource supplier and you agree to quite a severe exclusion or a total waiver of liability vis-a-vis that supplier. You may have a close relationship or whatever it is. You then go and buy an insurance policy and it doesn't have a subrogation waiver in vis-a-vis that supplier. You've banked on the insurance and of course it may not be there in the event that you suffer a loss further down the line. So there's no right or wrong way, I think, of going about it. The important thing is to have a plan, to be looking at things in a holistic way and to be collaborative throughout the business.
Is it fairly normal to enter into a contract with false assumptions in it with a supplier?
Happens all the time.
Really?
Happens all the time, yeah. And sometimes, because what will happen sometimes is that you will have, let's say, documents that the business have, which will describe certain things that need to happen, whether it's around insurance or otherwise. And actually, they may be quite historic documents. They may be documents that are no longer currently accurate. The current thinking of the board might not have flowed down. And that's where you get the disjoin. And if you have a working group seems to me to be a sensible idea to try and join that up and to make sure that the policies and procedures in place on the procurement side, because the procurement team that are often doing this in practice, are actually fit for purpose and current for the business. All this stuff sounds easy. It's, you know, because people are focusing on ESG, because people are focusing on cyber, you think people are on top of it. Actually, when you get down to the nitty-gritty, getting people in the room is the key to it, I think, including as part of the DD process. Just one other thought, actually. Buying companies, of course. If you buy a company, you buy in that legacy supply chain. It may be that company wants to integrate with your business. So there's a separate DD process around buying in organisations into your group, which carries with it some material risk, and there's a DD side there as well.
Oh, that's a very, very good point. Thank you, Greg. Adriano, we know, and we've spoken a lot already about supply chains that are multinational, that run through multiple different jurisdictions, despite, as we heard earlier during the pandemic, this idea of reshoring, or this new one that I heard last week, friendshoring, that we should have supply chains that only run into countries that we share economic and political values with. But we do know that supply chains remain very large and running through different countries. What can you, the insurer, with your enormous amount of institutional and intrinsic knowledge about different areas, different legal systems, different supply chain resiliency and conditions in country, what can you do to help support the risk manager who is trying to ensure their supply chain is resilient?
First of all, I would say that we should stop talking about supply chain, because it's more like a matrix, right? Supply chain gives me the idea
write
of
that
something
down.
that is linear. It's not mine. Yeah, it's a very complicated, and globalization has added to it. One of the ways that we've kind of thought about this is by creating what we call a resilience index. It's open to public use. It's if you Google FN Global Resilience Index, you get it. It's a way to benchmark countries around the world. 130, I think, they're there on the ability to resist or to sustain a disruption, whether it is a political, economic, cyber. There are about 15 factors built in. Some of the data is our proprietary data, especially risk quality, fire prevention, legislation, these kind of things. Other pieces of data come from reputable organizations. It's not the absolute truth, you know. It gives a view, and it's a tool that maybe decision makers, risk managers, or even board members could use to do things like, opening a new piece of supply chain somewhere else, or determining whether going to a certain place to do business is good or not. There are other factors that come into play, obviously.
So you could use it on a strategic or an operational level, so to speak to the board or to
It's a way to use data in a way that is, a simple, visual, and has some, has a lot of validity if you dig down into the various components of it.
Yeah. Again, Richard, I like coming back to you for the real life experience, but is that the kind of information that you would find useful to understand this sort of resiliency in different countries? I'm sure you already have that in many ways.
Definitely. I Nav saw your tool at the previous event in Liverpool, and it's brilliant. Particularly interested for our international business when we look for new business opportunities. Where do we want to go in the future? So yeah, we do have similar systems, but I thought it was a really good tool.
Yeah.
Okay.
Yeah.
Thanks.
So information is the key, and I like the fact from what you said that it only has 16 different factors. And I think of something like the World Bank's ease of doing business ratings. There's 200 or 300 that go into that, and I think transparency in the use of information.
There has to be a balance between simplicity, yes, and accurate.
Is key. We have about 5 or 10 minutes left before we open up for questions. So I just want to move on a little bit to the question of risk transfer, and particularly, I know this is an enterprise risk management forum, but of course, insurance and risk management are two sides of a similar coin. And I think a question that we often want to ask is, and this is for either Greg or Adriano or both, when it comes to supply chain, what are the limits of insurance? Can you effectively insure a supply chain in the modern world?
Maybe I'll focus on the non-property aspects of it a little bit. But the starting point is the obvious one, which is no, you can't insure all of the risk. You can insure a decent chunk of the risk, but one needs to fully understand what that risk is in the first place in order to even start having the insurance conversation around it. If you stand back and look at where might I try and cover it, It might be public liability, product recall insurance. We're seeing a lot of disputes in that area. It might be credit or political risk or trade credit insurance, where you have defaulting counterparties in the supply chain. It may be, as I touched on earlier, D&O risk if the board has an issue, and a number of other insurance solutions are available as well. So you've got the first question, which is there a standard line of cover that can pick up that risk? Even if there is, you're not going to buy unlimited coverage for that risk. There will be commercial decisions, there may be capacity decisions, lack of capacity in the market, whatever it might be. And then when you get down to the details of the coverage, there may be coverage issues. For example, if you're trying to insure a pure contractual liability, typically you can't do that. You can insure liabilities to the extent that they'd also sound in tort or in statute. But if you've got an indemnity in a contract that you're looking to rely on, beware your supplier might not actually have insurance against that pure contractual element of the liability. And whenever one has systemic risks starting to come into business, whether that be jurisdictional risk in relation to Russia, Belarus, Ukraine, communicable disease risk, Brexit type risk, whatever it might be, one tends to see the insurance market taking a view on what do we actually want to cover. And then you see consequential exclusions appearing in policies. Sometimes they come back out again. So it's a bit of it's an organic being in terms of the extent to which you can practically insure. And you need to do quite a detailed mapping exercise and work quite closely with brokers and insurers to work out the extent to which you're actually able to do that. And that's before you get on to questions around sort of legal insurability as well.
Not a lot to take in then. Adriano, same question. I mean, maybe more from a physical property side. Is it possible to insure modern supply chain risk?
It is possible, and we do that. Everybody knows that there is a certain capacity for unspecified supply chain, which may be even to multi-tiers. If you want a number, I've seen capacities ranging from £5 million to £25 million for this kind of unknown and unspecified coverage. Where it goes in the next 10 years with all these events happening, I don't know. I don't have a crystal ball.
Of course.
For named, but I have a caveat on the name, for named suppliers, personally, in my experience of FN Global, we treat them as plants of the insured. So, full capacity, whatever is needed, but with a caveat, and the caveat being, there has to be an influence and an ownership from our clients. So it's not just the fact of named, it doesn't mean to have an address. It means, how integrated are the policies? Does the client influence, for example, things like loss control? If these things happen, and I've seen them happening in emerging market as well. It's not a case of developed versus emerging market.
Yes,
I've seen very good supply location and in a very good infrastructure environment in East Asia, for example, in South America, etc. The important is not the information per se, but is the information validating influence and ownership from our clients, and that could depend on the size of the supplier versus the size of our client. Different relationship of strength can dictate how much a client could influence really the risk management of the supplier.
And on that point, because you were saying that obviously you look for evidence of loss control. I mean, what kind of things do you generally look for? The providing of alternate suppliers or?
Yes, I mean, alternate suppliers is in the hand of our client, but again, I had an example of a client that had a perfect BCP involving diversification of suppliers, but at the moment of the loss, they realized that the quality of the product coming from the secondary supplier, the alternative supplier, was not exactly the same, and for marketing reasons, they decided not to use it.
And they
last minute, and they claim. So, there could be these considerations. Otherwise, we go and look at the supplier as if it was a client's own business. So, maintenance, equipment maintenance, business interruption, looking at, obviously, at the product chain of a client, because the supplier may do that product for our clients, but may do a lot of other things. There's a lot of considerations there. There's a lot of aspects. Multi-tenanted locations our clients look at, the supplier part of our clients could be well managed. Now maybe it's in a building that has, a lot of other businesses there that are more local and not managed with the same approach. So we need to go and see them, basically.
Yeah. Physical inspection. So just one more question then before I open it up to the audience, which is risks of the future. We were talking about this when we were just standing there during the coffee break before, which is we seem to be having a lot more of these 1 in 100-year events. I think, Greg, it was you who were saying, or Richard, I can't remember, but it was, we seem to be having 1 in 100-year events coming along relatively regularly now. Maybe it just seems that way. I read a book a little while ago where a journalist told me that every year will be the worst year ever going forward in perception, if not in reality. So when you think about either the businesses that you are part of or the businesses that you insure or work for, what do you see as the big major risk of the future? None of us have a crystal ball, but when you think about the future, what do you worry about most? If I could just go down the line, maybe starting with you, Greg.
Yeah, well, there are different schools of thought on this, and one doesn't know what the next 1 in 100-year event's going to be that we're probably going to get next year at the current trend. So you don't know what the future looks like. It may be, given the severe pressure on supply chains and the political desire to rely more upon local suppliers, that you see a shift more to use of suppliers who can't be impacted because they're in different jurisdictions. From a legal perspective, what that then gives rise to is transition risks. You move away from your current suppliers, you've got to go through the DD process again. Are they as good quality as suppliers, and the risk that flows from that? And then you'd have systemic concentration risks. If you are a business and currently you're multinational, brilliant globalization, and then you focus on a smaller jurisdictional scope, what happens if there's another communicable disease event that knocks out UK business, or a major cyber attack that knocks out UK business? You've got that concentration risk that would be problematic as well. But ESG and cyber are obviously the hot topics.
2 or 3 good ones in there. Richard?
I think from a supply chain perspective, I think it's the potential of deglobalization, decoupling. I know some of the members here may have joined Airmic in a recent teleconference where we talked about potentially going backwards in terms of ending globalization, starting to look very focusing within you can see it happening with geopolitical risk in the economy, is that starts to happen. So ultimately, what does that mean to our supply chains, particularly for the UK, who import quite a bit?
Yeah, absolutely. I see that as a major problem in coming years. Adriano?
I would just add the fact that climate change and the political instability in areas of the world will cause more demographic shifts, and that can create a lot of problems if not managed correctly. I think of one, urbanization, which brings increased risk of flooding, which brings probably concentration of people in the same areas, again social unrest, etc. Just to give you a very almost a banal example, I live in Basingstoke. They are building all over around Basingstoke, new housing estates, a lot of concrete, and Basingstoke is in a bowl. We already had entire areas of Basingstoke flooded in the past, and I'm thinking if they don't do this correctly, that is going to happen more and more often, and it's just Basingstoke.
Yeah.
So,
this is where that concept of the sponge city is so important, where water can flow right through, but I haven't seen much evidence of that in my neighborhood during the heavy rainfalls. Well, thank you very much. We've got about 5 minutes left for questions. I don't know if anybody has one that they would like to put to the audience. There is a roving mic, one in the back over there, and another in the front. One of my colleagues has the roving mic. Should we go to the front first and then the back? Sir, can you put your hands up again, please? One.
I'd just like to say fantastic presentation and insights from the panel. Thank you, Greg, Richard, Adriano, and Alex as well for facilitating. My personal view is that one of the key risks going forward, and it's something that Richard touched on very briefly, is supply financial health. We are in a recessionary period at the moment. There's a lot of challenges. There's the cost of living going up. And a lot of companies may not survive this period. And the last thing that a person within an organisation wants to do is to get a letter from the supplier saying, "Dear madam, we can't operate anymore because financially we're not capable." What's the panel's view on what companies can do in terms of managing that risk? I mean, there's portals such as Dun & Bradstreet where you can monitor the supply financial health, but that's all sort of retrospective and doesn't really flow with current levels. And there's also the Altman Z-score, which is a very basic way of scoring financially your suppliers to see where they are. But ultimately, do we think that maybe like a supplier relationship management type program within organizations where you stay very, very close to your key suppliers and your critical suppliers that can hurt your business is a good tool for organizations?
Richard, do you want to?
Yeah. From my perspective, it's when we did the financial analysis recently, the large volume of poor financial ratings was a concern to us, particularly when there were sole source suppliers. That's what the option of using alternatives was not there. So I think the key for us really in the short term is around our decision making. How can we support them? So for example, can we, our financial terms, our payment terms, can we contribute now to keep them going? That's one aspect. Another aspect is stock management. I think in our case, a number of businesses, just-in-time production, reducing supplies and stock is but that's one we're looking at again now. And actually, particularly those suppliers who are sole source, can we invest now to increase stock levels just to keep them ticking? And I echo your point around Dun & Bradstreet and the various reports. We use them. It's just that it feels like they need to be real time now. Things are changing quickly. Yeah.
Okay. We had one question in the back far corner over there, and then if we have time, we've got one more in the center. We've got about 2 minutes left.
Thank you. Francis Keane, McGill & Partners. Question for Adriano. I liked your reference to supply matrix as opposed to supply chain. And I guess my question for you, Adriano, given the size and scope of FM Global's reach in this area, you talk about doing the due diligence on clients and then on named suppliers. Once you've done that due diligence, is there a way for you to use that data so that if you see the same companies coming up through the supply chain with other clients, you can use it rather than reinventing the wheel and develop a useful database of the information that you need for that purpose?
Well, we do that. A lot of big suppliers of our clients are in turn clients of FM Global. So we need to use that huge amount of data to build something that is useful also for other clients looking to diversify their supply chain, and that has come up a lot in our discussion with clients. The risk that we face in that is cost liability. So basically ensuring too much stuff in a single location or for a single company and not being able then to pay a loss that would involve numerous clients supplied by the same supplier, etc. But obviously, when we invest in one of the ways we invest is increased capacity for this type of situation.
Brilliant. We're at time, but I'm going to break my cardinal rule and take one more question from the front. So if we could just get the mic down here for one final question, and I'll take the wrap and the heat from Julia afterwards. Thank you, sir.
Question starting really from Greg. To what extent do you think legal control over subcontracting is effective and has received any more focus to try and achieve control over subcontracting to less and less ethical suppliers, which seems to be what...
Sorry, do you mind speaking up slightly? I just not quite hear.
Sorry, so the question is, to what extent are contractual remedies preventing subcontracting and subcontracting to less and less ethical suppliers, sub-suppliers being introduced, and the rest of the panel, are they thinking about that, and is it effective? Is it able to prevent these long supply chains where essentially, particularly like in the garment industry, things just get subbed so that there is no control really. It's impossible to police the supply chain.
Yeah, I mean, it is impossible to manage a supply chain in that way. As you go down the steps in the rung from a legal perspective, I suppose the challenge probably comes back actually to the fact that when one looks at how one manages risk all the way down the supply chain, in fact it comes back to that same risk in relation to not only how you're presenting your risk externally that I touched on earlier, but also in terms of when one is looking at sub-suppliers down the chain, you don't have those direct contractual relationships with them. It is possible to have those kinds of discussions with sub-suppliers, but in reality, does it happen? No, not really. So the risk mitigant there is to do two things, I think. One is in relation to your primary supply contracts to make sure that the protections are built in at that stage, but also to understand your risk exposure in terms of if something goes wrong at that next step down the supply chain, what does that mean for your primary supplier? What risks flow from that, and are you guarded against that? And I suppose from a hedging perspective as well, have you hedged out what? Because you may not necessarily have visibility on it all, but have you hedged that in the sense of, do you understand that supply chain, and is there a backup supplier that supplier has? In the cyber arena in particular, there are increasing requirements in contracts to start thinking like that in the way that there weren't previously. But it's a very fertile area, I think, to try to get right, because it's a fundamental visibility issue that people face. And you've only got that one primary relationship via the contract with your primary supplier.
Wonderful. Gentlemen, thank you very much for that. I'm sure you'll all join me in applauding our panel, Greg, Richard, and Adriano. Thank you.